Hey traders, crazy market here. This is the person algo room, and just a couple things I think you may want to focus in on. First, the 60-minute SPY model. This is a algo trade, and it clearly shows what the positions are and what it does. It just was long from last week. It exited on a trailing stop today. Market's up a little bit, but what you need to watch and focus in, this is a person volume indicator, and we have this on a few platforms. You may be familiar with them. And this is for day traders, the 5-minute E-mini S&P with the same volume indicator. As you can see, it's long currently. The red line down here represents the initial stop. So it shows the long position up here on the strategy. Everyone in our live trading room watches this and sees this live as it's happening. So you can clearly see it's long 2 futures, and you can see the strategy price it entered. You can see the time it entered, the last price, and the net result. So all of that's transparent and live. So when you get a buy signal and you have kind of improving volume for a day trade, and that's what that momentum indicator of volume displays. So the histograms are starting to improve with a little bit of green. That means that there's more than just John Person liking the trade, right? So that's a short-term trader. Now this particular algo does several things. It gives you an initial entry, and it shows it on the chart. It shows the risk, which is the red line, gives you the intended profit target, and then trails a stop, an emergency stop, so in case the market falls all the way back down, you take something out of the market. This currently hasn't hit enough of the profit target to take a profit yet, but it's got a nice little trade going for it. So the takeaway is simply this. The market keeps running up, and on the day trade, it's got a little bit of follow through here from Friday's action. But one thing I would say that is interesting is that we have lighter volume on the rally up here. That's something. And then the higher time frame, the 60-minute model, is flat. Now, sometimes it gets flat and markets can go up a little bit, but what I would watch for, and what we are watching for, is if this market has a key reversal from these highs and closes below 512, that will probably initiate a new short. Based on the volume histogram, you can clearly see how the readings are making lower highs as the price makes higher highs. That's called a divergence. And generally speaking, it's not a really strong buy setup for bulls when you have markets making new high on weaker volume. So it's one thing to pay close attention to. We could be closer to a pause in the market, maybe a 1%, 1.5% correction. If that's the case, when the 60-minute SPY goes short, that's where we use SPY options, the S&P 500 options, and we can use 3 to 5 days. So we know what the average holding period is, and if you're looking for a 1% pullback in the market, I mean, you're probably looking at easily a 5-handle decline. There's kind of like some interesting observations here. You got a gap down below around 500 the market may want to try to test. So we'll be paying close attention to that. Next, when you get a sell signal, we want to look at what the condition of the market in this next chart below here. This is the kind of the crux of what we share, or at least show or believe, that gives us the best picture of the condition of the market. It shows the advancers in the S&P 500 versus decliners, and a cumulative advance decline ratio line, which has been pretty strong of late. More importantly, it has on-balance volume. It also has this proprietary tool we created, which based off the McClellan oscillator, it's based off the S&P 500. We modified it with some moving averages. And it kind of tells us whether or not, based on too many stocks going up or not enough stocks going up, whether or not the S&Ps are overbought by the length of time the market moves and the amount of stocks that are in conjunction moving higher with the index. So that's kind of a vital. It's right now nearing some overbought condition readings, by the way. Finally, we have stochastics, which we look at. So if you're looking at whether or not you want to take a signal or not, looking at the condition, does the condition warrant longs or shorts? That's what we have here in front of our traders. We also have crude oil, which took today 2 good trades. So it went short, went long, and it just went flat, and market went down since. The other one is the SQQ. It's an inverse related ETF, which, by the way, is short the market, and the market is, as you can see, is moving lower. So the SQQ has got a position here. It's up a couple bucks, and the S&P's racing up to newer highs. So when we do this at Person's Planet, this is one of the trading rooms that we do. The other trading room that we have is what we look at, and I'll go to the main room. And for the main room at Person's Planet, we use Thinkorswim because we're doing stocks and options. We're also looking at the main indices, the S&P, the Qs, the Russell, which we have a long position in. We also look at, interesting stocks that, are just not just interesting, but I mean, super micro here, just got added to the S&P 500 or will be added to the S&P 500. So it's just having an insane run. Then you have Apple, we have Google, of course, the heads of what I call the five family. Artificial intelligence, a trade that we're looking at, C3AI. The volatility ETF on the VIX, which is the VXX. And if we're going to see a market rotate or roll down, we want to see if there is positive traction coming in to the VIX, which would show that people are taking protection on their S&P positions by maybe the nature of buying options. So we use several different non-correlated but confirming indicators. Breadth, volatility, maybe the representation of people buying put options or not. And that's how we kind of get a better edge on how to trade the market versus maybe a lot of people thinking the market just can't go any higher. I remember 1999, everyone said the market couldn't go any higher, and yet it did until it didn't. And until we start to see signs that the market's rolling over, a break below pivot, increases in volatility, and other people feeling the same way via representation of good, strong volume, there's no reasonable explanation as to, to say the market can't move a little bit higher and gyrate, meaning people get out of a little bit of meta, maybe throw a little bit more and back into Apple, for example, and maybe some crude oil or banks. So that rotation can keep this market grinding higher. And that's what we do here at Person's Planet to help my traders and our investors. If you'd like more information on this, simply go to personsplanet.com. Go check out our website there. And then if you'd like access to these indicators and these tools, join our trading room. We look forward to seeing you. Good luck. This month promises to be another, what I think, exciting month. We've got the Ides of March. We got the first quarter ending in the third week of March. We've got a lot of things happening, seasonality, energy, international things going on, banks. We have, of course, the Federal Reserve. Earnings season's wound down, so we should see a cross current of actionable trading ideas, and hopefully these indicators put you and will put us on the right side of the market, and at least give you a better edge over other traders. Thanks for watching. I hope you found this helpful. We look forward to seeing you in the live trading room, gang.